Hi, everyone. Very good afternoon, good morning, good evening, wherever you are. My name is Bobby. I'm the co-founder of CoinGecko. Super excited to be presenting at SmartCon this year. So I will be presenting on the state of the crypto market today. And yeah, basically a lot of this thing was written for our Q2 quarterly report. So a lot of the data was up to 30th of June, and I'll be happy to present today. So let's see, yep. So the first thing that we kind of talked about last was the Q2 spot market. So the Q2 was an interesting time for the crypto market. Crypto market went up a lot and it hit all the way up to $1.3 trillion and no, $2.2 trillion. But interestingly enough, this was mainly driven by the meme coins. So meme coins took over the crypto scene at the start of Q2. And by the end of Q2, unfortunately, the market has sort of dropped 41% from its peak to $1.3 trillion. This was kind of coincided with Tesla's announcement to stop accepting Bitcoin payments because of environmental concerns. And also, there was a China FUD where crypto was finally banned. Crypto mining was finally banned in China, and a lot of the hash rate was moved out of China. In terms of crypto market dominance, Bitcoin saw its dominance go down in Q2. So it started the quarter at about 60%, and it ended about 49.7%. The big gainer from Q2 was really Ethereum, who gained up to 20% in the market dominance, up to 20%. And we also saw Dogecoin gaining a lot in Q2. Chainlink was interesting. It was kind of stable at about 0.6%. And yeah. The next slide that I have over here is actually on stablecoins. So stablecoins continue its intense, fast growth. So we saw a 76% increase up to $105 billion in circulation. Volume, however, for stablecoins dropped by 35% to $73.6 billion. I think the interesting to note is that this UST stablecoin, which is a stablecoin issued on the Terra blockchain, is now the fifth largest stablecoin with about $1.9 billion in circulation. I think it'll be interesting to watch how UST continue its growth in the next few months and to see if it actually challenges DAI as the decentralized stablecoin of choice. I think a lot of the growth in UST was mainly driven by the high yield that's offered on your UST deposits on Anchor on Terra blockchain. So the next thing I'm going to talk about is on DeFi analysis. So on the DeFi market. So I think the interesting to note about DeFi is that the market cap, as usual, went down as well in Q2 by 43%. The market cap reached a peak of $150 billion in May before suffering a 55% drawdown. Quarter on quarter, DeFi market fell 43%. I think the interesting to note is that despite going up or going down, the market share has retained roughly about 5% of the crypto market dominance. I think there's some concern that everyone who is interested in DeFi has already purchased some DeFi. So there need to be some sort of a new money coming into the space. And this could explain how a lot of focus on some of these lending protocols like MakerDAO and Compound and Aave to focus on including real assets such as real estate loans for MakerDAO via Centrifuge and Compound offering institutional access to DeFi and also Aave Pro following suit next quarter. I think interesting to note is that DeFi summer happened sometime in summer last year, 2020, where the peak of the market cap was about $20 billion. But if you look at the chart, like DeFi bull run of 2021 was even crazier, and it went all the way up to $150 billion before retracing since then. The next slide I have is actually a slide on the total value locked in DeFi. The total value locked in DeFi has now about $103 billion. We have seen TVL gone up significantly in just 1 year, over 100x growth in 1 year. And I would say that TVL in DeFi is expected to grow much further as DeFi continue to eat traditional finance. One big trend that we notice as well in this year especially is the rise of the multi-chain DeFi future. There was a 65% TVL growth for Ethereum in Q2. And and Ethereum now has $104 billion in TVL. But that being said, the main reason for multi-chain growth, multi-chain future in blockchain was mainly driven because of the high gas fees from Ethereum and the increase in Ethereum price causing transactions on Ethereum to be really expensive, pricing out many new users. No one's really interested in paying $50 for a transaction on Uniswap, especially not a new user. So we start seeing the rise of cheaper alternatives such as Binance Smart Chain and Polygon, for example. And both of these have gained significant market share. Binance, at its peak in May 2021, BSC had about 17% market share in terms of the TVL. We also start seeing Polygon having pretty good growth as well. And it was about 5%, mainly because we start seeing other scaling solutions such as Optimism and Arbitrum being slow to roll out. And I think the interesting thing about Polygon is that we start seeing a lot of the DeFi native applications such as 1inch, Aave, and Curve deployed on Polygon, driving a lot of TVL with very high liquidity mining incentives on the Polygon network. In terms of the market dominance for DeFi, I think the interesting thing to note is that DEX is the backbone of the DeFi ecosystem. They make up about 48% of the total DeFi market cap. The main contributors are mostly decentralized exchanges on Ethereum, such as Uniswap and SushiSwap. I think the interesting thing to note is that we start seeing cross-chain decentralized exchanges such as Torchain gaining traction as well, and it's one of the largest market cap for DeFi tokens. Besides DEXs, lending protocols and oracles such as Chainlink have also proven to be key mainstays of DeFi. So they have the second and third largest contribution for DeFi market cap. We also start seeing like interesting new segments, fixed interest rate and asset management projects having grown. However, the market cap has been is still pretty small relative to the entire DeFi marketplace. Next, we'll start looking at the NFT market. So NFT market has been an interesting market. So when we prepared this presentation, we kind of look into the market from January to June. So one of the things that we look about was the amount of volume that the art marketplaces have done in Q1 and Q2 this year. So the NFT market sort of peaked sometime in March 2021, where you saw about $205 million in trading volume from marketplaces such as Nifty Gateway, Super Rare, Foundation, Makerspace, Noon Origin, Asing Art, and Hik and Noon. But it's sort of decreased since then. The peak in March was sort of driven by Beeper's $69 million sale in NFT art. I think July numbers haven't been out yet. We don't really have it in this slide, but I think we start seeing a lot of NFT interest coming back into the market. We start seeing CryptoPunks being talked about a lot. Bought a lot, market buy of like 100 over by 3 Arrows Capital a few weeks ago, last week, I think. And that was kind of a big driver for NFT space. I think the interesting thing to note about NFT marketplaces, art marketplaces, is that historically everything has only been on Ethereum, but we start seeing marketplaces appearing on the Tezos blockchain as well. Hik and Noon is the key notable element over here, and we start seeing a lot of artists putting out NFTs in this marketplace. We also start seeing Binance Smart Chain, Binance pushing out a lot of NFT initiatives as well, and it'll be interesting to see how things play out. In terms of the general NFT marketplace overview, there are two key leaders in this space, OpenSea and Rarible. One of the demand has sort of plateaued, I would say. Both saw a slight decrease in trading volume, about 15% from April to June. That being said, although trading volume has sort of stabilized, it still cannot compare to its all-time high in March, where both of them clocked in a total of $187 million in trading volume. One interesting observation that we saw is that OpenSea has sort of grown really dominant in the NFT space, and OpenSea's trading volume was roughly 3 times larger than Rarible. However, in April, however, if you look at it, by the end of June, it was 17 times bigger. So in fact, even during the sort of bear market in NFT in Q2 this year, OpenSea even surpassed its all-time high volume of $147 million. And this is not surprising, as we have seen OpenSea has sort of gotten 2 large fundraising rounds recently. So one of the reason for this could be the NFT collectibles are sweeping across Ethereum, and they're often listed on OpenSea as the preferred platform of choice because they have the largest buyer and seller. So it's got a good, strong domineering effect in space. The next slide I have is on a slide on the NFT non-gaming collectibles. So basically what we are seeing right now is that, and this is data up to June, we're seeing a lot of this like NBA Top Shot, CryptoPunks, Meebits, Hashmas, and so on, going down in price in June. Like, I mean, NBA Top Shot has been going down actually for the whole quarter, like March, April, May, and June on the average price. But what we don't see over here is that the July's number for CryptoPunks has definitely gone up a lot, like at least close to 2x increase from the floor price. So any one of you who has picked up CryptoPunks in June would have probably made a good decent amount of profit. The big exception, I would say, in this thing would be the Bored Ape Yacht Club, BAYC, which sort of gained a lot of which was launched only in April but has performed. So yeah, in June it had an average floor price of 2,081. I think Hashmas has been kind of a disappointment in this case. It started out pretty interesting, but it's kind of plateaued and kind of gone down. In terms of aggregate sales volume, NBA Top Shot is the biggest one by far. It has $600 million in aggregate as of 1st of July, and over 600,000 unique buyers. CryptoPunks is second with $365 million in volume with 4,000 unique buyers. And the rest is about $50-60 million for sales volume. But I think the biggest kind of driver, the biggest surprise, or maybe not so surprising, was the biggest gain in NFT space is the rise of gaming NFTs, play to earn Axie Infinity. So Axie Infinity has been around for more than 3 years, but its popularity did not really take off until 2021. If you look at the chart over here, the monthly sales volume for Axie Infinity trended upwards in February 2021, and it's gone up to 131x up in June 2021. So the main catalyst or driver for this increase in trading volume was the launch of its sidechain, Ronin. Phase one only allowed land-based assets to be migrated, but the catalyst came in May when Axies itself were migratable and could be traded freely on the Ronin-based marketplace. So together with the search and media hype and the play-to-earn element, like this led to a 101x increase. I think the interesting thing to note about Axie Infinity is that a lot of people in developing countries, for example, in Philippines, they could earn more money playing this game than what it takes than if they would compare working full time in McDonald's or driving a Grab, for example. So yeah, I think this might be an interesting element, and we'll start seeing a lot of play to earn games launching in the next few months. The next slide that I have is actually we'll be looking into the state of the crypto exchange market. So over here, have a slide comparison comparing the top 10 decentralized exchanges and top 10 centralized exchanges. The market, despite the growth of decentralized exchanges, the crypto market is by far still a very centralized exchange driven market. So like it's a large amount of exchange. We can see trading volume has pretty much trended quite closely with respect to the price. Bitcoin and crypto prices peak in May, and we saw trading volume for exchanges rise pretty highly, and then it sort of dropped by half as well for June. Spot trading volume grew 69% to $7.38 trillion for both of these guys, the top 10 DEX and SEX. And yeah, I think 88% of them are actually coming from centralized exchanges. So in terms of centralized exchanges, Binance is still the largest venue for trading. It grew its trading volume 73% in Q2 versus Q1. And we start seeing the second largest exchange being Huobi, OKX, Coinbase, and Kraken in this sense. Yeah. On average, most centralized exchanges have grown the volume at about 22%, but FTX was the key leader in the space. It's grown its volume by over 202%. When it comes to decentralized exchanges, I think it's a very interesting dynamic. the ecosystem is extremely cutthroat. So we prepared sort of a table over here showing kind of the top 10 decentralized exchanges for the past 6 months in first half of the year. So we start seeing a lot of interesting things. So PancakeSwap kind of launched with the rise of BSC, and at one point in April was actually like from Q2 actually was actually the exchange, the decentralized exchange that has the most volume. In fact, it has more volume than Uniswap V2 over here in April. Uniswap did a big change. They launched Uniswap V3 in May 2021. So over here, separately, Uniswap V3 and UE2, they're not the top DEX, but if you combine the volume together, they become the top DEX. But what is interesting actually is to look down the table, right? So you start seeing QuickSwap, WhatsSwap, you start seeing different names appearing in the top 10. So I think the interesting thing is that this DEX marketplace is extremely competitive. It'll be interesting to see how these decentralized exchanges differentiate themselves to sort of gain a competitive advantage against their competitors, to build a moat. So yeah, we start seeing all these things happening. Yeah, Uniswap is still the king. So the interesting thing was, the surprising thing I would say is how PancakeSwap sort of rise and gain a lot of market share with respect to the DEX marketplace. So this is a slide that we prepared as well on the DEX dominance. So again, you can see over here, this is a chart. In yellow would be the PancakeSwap, and you can see is how these things all changes quite significantly. So yeah, we have a slide here comparing Uniswap and SushiSwap. So in May, actually, in April and May, we start seeing PancakeSwap having more trading volume compared to Uniswap. But when it comes back to June, once the market crash, we start seeing Uniswap V2 and V3 gaining more volume compared to PancakeSwap. I think the interesting thing to note about PancakeSwap is that, and Binance Smart Chain, is that we start seeing a lot of retail traders coming in, and they all coming basically from the Binance on-ramp and kind of moving on to the high use offered on the BSC network. So a lot of them, and PancakeSwap is kind of the only DEX of choice on BSC, and they've sort of gained a significant market share. It's not as competitive compared to the Ethereum blockchain, where the DEX marketplace is a lot more competitive. So I've kind of last 5 minutes or so on some of my prediction on what I think will happen in the next half of the year. So one thing that I think is happening for sure is that the multi-chain future is here, and I don't think it's going to disappear anyway. If you look at this chart that we prepared, there's a bunch of L1 chains on layer 1 chains competing against Ethereum, such as Binance Smart Chain, Terra, Solana, Avalanche, Phantom, Polkadot. We have side chains like Polygon, XDAI. We have layer 2 scalability solutions such as Optimism, Arbitrum, and ZK Sync. We start seeing all this growth happening in the crypto space, in blockchain. What this means is that all these things provide significantly higher capacity. So one of the main issues is that Ethereum does not have the capacity to support all these transactions, and therefore the transaction fees are high. So with the higher capacity that all these chains offer, we start seeing a lot of significantly lower transaction fees. And you might think that this will compete against each other, but what I like to think about is that it sort of encouraged a lot more users to come on board onto crypto and sort of build a virtuous cycle. So no new users going to come on board and start paying $50 for a transaction on Ethereum. So Ethereum is probably going to be left to the big whales to transact on it, and then a lot of the new users will start transacting on the other chains. So there's no reason why it can't the other chains can't survive with Ethereum as well. The other thing that I expect to see in second half of the year is that I think DeFi will continue to eat traditional finance. DeFi can no longer be ignored by guys in TradFi. I like this quote. First they ignore you, then they laugh at you, then they fight you, then you win. So I think DeFi has grown from pretty much under the radar. It's grown more than 100x in TVL, in growth, in market cap, and so on. And it's grown so much that even the traditional finance sector can't ignore it anymore. it doesn't mean that the traditional finance guys understand what DeFi mean. I think the best example is Goldman Sachs trying to launch a DeFi ETF where it has Nokia, Cisco, and Sony in there. So that sounds almost ridiculous to me. But what we're seeing is that a lot of the traditional finance guys are FOMOing into DeFi because this is no longer, they can't really ignore this anymore. But that being said, who are the winners in DeFi? I think it's still very early to say. DeFi will continue to be hyper competitive. I've shared earlier the slide on some of the top DEXs in the marketplace, and it's very fluid. The leader, the number one position today, may not be the leader tomorrow. And I think it'll be interesting to see how the intense competition among all these players in DeFi will force these guys to increase innovation, and then they'll find ways to lower costs and create useful products. What this means is that as an end user, you would sort of benefit from all these things, all these benefits. And I think it'll be interesting to see how will all these DeFi products partner up and innovate to build a moat for themselves. I think the interesting thing for me to see is I'm wondering if we will start seeing the rise of a super DeFi app where this DeFi app would sort of do everything that you want to do in the DeFi ecosystem. Like it has a lending product, it has an exchange, it has a U aggregator, and many more. So I don't think there's a product like this anymore, but I think it'd be interesting to see if such a product come out. The next slide that I have over here is the rise of play to earn, and it is actually becoming the new universal basic income. I've always had this opinion that we don't know how people will sort of survive, and maybe the government sort of will have to pay people to not go on strike, for example. But I think Axie Infinity has shown the world that a play to earn model can work. And it's interesting that income from playing games is greater than the minimum wage for many countries, sometimes even once developed countries. I think the interesting thing to note about such play to earn games is that it really opens up finance to a significant amount of population that has not been banked before. So imagine the number of people. I mean, so Philippines has a large number of people that are unbanked, that does not have a bank account and do not have access to a bank account because they live really far away from the city, for example. But all of them will have a handphone, have a mobile phone, and they can download an app they call Axie Infinity and start earning on their free time. So I would like to ask and everyone to sort of imagine a number of people in the Philippines who have a digital wallet before they even have a bank account. And if you sort of think about the possibility for everyone across the world in Africa and so on, who do not have a bank account, this sort of really unlock, because once they have an access to a digital wallet, they have access to, they're earning SLP in this case, but they could have a stablecoin, for example. They would have access to all these financial services that banks or the traditional finance have chose to ignore all these people. And I think DeFi is really interesting because it provides all these guys with a chance to have to save and to lend and to borrow for the first time that that before this they couldn't even have access to. And finally, I think the last slide I have on what I think will happen next would be regulations. I think regulations will be the single biggest risk factor for DeFi. How will regulators regulate this space? I think a couple of days ago, the SEC chairman, Gary Gensler, recently came out with a statement to regulate DeFi. And he said it's technologically neutral, but he said he's not neutral on investor protection. How he chooses to protect investors is a question, right? Will regulators take on a progressive or a heavy-handed approach to regulations? Regulations will play a big part in DeFi development, whether we like it or not. I don't think when or how regulations will come about, we still don't know. The flavor is still unknown, but I don't think it's going to last forever without regulations. Everybody wants regulatory clarity, but I really hope that regulators take on a progressive approach and kind of think of DeFi as a way to kind of spur new growth trajectory for the global economy. Just like how the internet industry was sort of regulated in a pretty light touch approach. If the same can be done over here, then I think we'll start seeing a very interesting golden decade for the next 10 to 20 years with a rise in all these innovations coming up in blockchain technology. I think the other interesting thing to note would be what would happen to Uniswap's grant of $20 billion to the DeFi Education Fund. Will it lead to any successful lobbying on all these regulatory bodies? And if we don't get any regulatory clarity, one of the things that I foresee happening more is that we start seeing a lot more anonymous teams launch because of the regulatory uncertainty in place. So yeah, I think, ladies and gentlemen, that's all the time that I have for today. I presented everything a little bit about state of crypto market that we have, and also some of my take on what's going to happen in the second half of the year. Thank you very much.
Bobby, thank you so much. That was incredibly illuminating to take a look at what's happened this year. And unfortunately, you've given me more questions, so I have got a list. So hopefully I'll be able to touch base with you later on. Maybe we'll talk. The idea of play to earn is a version of UBI that we didn't see coming, universal basic income. Okay, my mind is blown, and I'm expecting more mind-blowing things. So if you guys have comments about that as you're watching, please feel free to interact with us on Twitter, in the chats, and find us around, because so much of this content needs to have discussion around it and some processing.